Obviously, thank you very much for taking some time to talk with us today. I think it's going to be
Yeah.
great for our client base to get to know, where did your investing journey begin? What first interested you in the financial markets?
Yeah, it's sort of backed into it a little bit. Went to university and through sports primarily because a lot of guys on the varsity team that I was playing on were parents were actually Bay Street legends. In other words, they were the owners of large trading houses on Bay Street. And this sort
Mm.
of perked up my interest. But I also fell into, I wasn't a great student in high school, but when I got to university, I really picked up on economics, and econometrics, the statistical side of economics really sort of resonated with me, and I continued to go down that path. I think the combination of both really sort of nurtured my interest around trading, where, before I ran out to the pub at night, I'd be in the library for a couple hours reading the Financial Times and Wall Street Journal. But it was sort of by chance how I actually got into the banks. Like, I was more than happy to stay another 2 years in university doing masters in eco, but Barclays Bank came on interviewing on campus, and just out of a fluke, I dropped my resume in there and called in for interviews. Did the line of interviews, didn't get the job, but good thing about that interview, and this is a good thing to remember, is that sometimes interviews open up doors at other places. NatWest subsequently was informed about me from the Barclays connection, and it ended up starting in NatWest back in the early '80s. So that was really how I backed into the market. It was a combination of factors, but doors opened for me by good chance.
Do any trades stand out to you, or any investments that you made, especially in those early days where maybe a bit of arrogance got in the way, or something that stands out to you as a memorable trade when you first got started?
Oh yeah, the first trade I ever made was completely wrong, but I was sort of sucked into it. That's sort of the initiation trade where your boss is giving you the wrong information, and the biggest bank in the street, who's a good friend of my boss, is also giving me the wrong information. So that was sort of a wake-up call, is that you get initiated in subtle ways, and they come and check on you whether you're actually following the market. So I ended up long dollar Canada when it was probably the worst season to ever have put on a long dollar trade, when the Bank of Canada was doing the exact opposite. That tells you one thing, is that to do your homework and not rely on other people's messaging. And I think it wasn't a big monetary mistake, because I was trading a very small position at the time, but it was a very, very valuable lesson that I've took with me over these years. Is just don't listen to anybody, do your own homework. And that's the most important thing.
What made you then want to step out on your own and run a hedge fund? What was it like having that responsibility?
The first foray into working independently by myself, it was a real struggle, because I was so used to that team environment that it became almost it became almost lonesome, and
Mm.
it took a while for me to adjust to that. Stuck in a room by yourself kind of trading syndrome, or with one other person when you're used to being in a big group. So that was a bit of a struggle initially, but things all came together eventually. And I wasn't it didn't overly appeal to me, but it was of an interest to me at that point, because I was looking to spread my horizons. And I was also looking for a directional change as to where I was going to move next, because certainly when I did make that move, I noticed that the move away from phone trading into algorithmic trading was on the move. And I wanted to sort of explore new opportunities. And this was a good opportunity for me to test out my skills on more of an online trading environment rather than traditional market making phone environment.
Moving into algo trading, could you maybe, I think that term gets thrown around a lot. Could you maybe just give a simple explanation about what it is and maybe the ins and outs? Because I know for myself, I see it as a scary thing, but I'm sure
Yeah,
maybe a
no,
bit
yeah,
simpler.
there's a lot of confusion about what, quote unquote, algorithmic trading is involved. At the essence, it's just execution. It's just smart
Mm.
order routing. In other words, you're just getting a huge order and you're slicing it up more efficiently to get a better return, execution return, without leaving a massive footprint on the market that the markets can read. That's the essence
Mm.
of it all.
There's this high level of mathematics that go into the algo side, but then I'm curious to see what you think, the everyday trader can learn from these algorithmic models and strategies of trading. Mm.
I've seen so many traders making huge mistakes of not honoring stops. Through my career, traders not honoring stops was a big failure. It usually caused them to lose their seat. Other common mistakes that people made, and something I learned quite readily, was the use of looking at volatility as it applies to specific sectors in the market. Like for oil, has a huge footprint when it comes to volatility. And if you're looking at currencies, for instance, dollar Mexican has a much larger footprint on the volatility scale than what, say, the euro would have, which is pretty low vol. So you're looking at different ways to run risks. So in other words, if you feel very strongly on a dollar Mexican trade, which is a really great reflection of risk on sentiment, you go in, but you're not going to go in with the same enthusiasm or the same trade size that you would go in with the euro. That's something that pretty basic stuff, right? But it's something that you learn from studying the background mathematics and studying the volatility index.
I'm curious to see that, because it's obviously something that people struggle with, and obviously in your environment, you would have seen it quite a bit. Is that something that you've always found has defined the better traders that can just sit there, like you said, walk away and come back to it 2 days later rather than getting straight back into the market?
What the great thing about a great trader, and the ones that I worked, is they're pretty much bulletproof. In other words, they don't let their losses bother them.
I'm curious though that you seem to have touched on quite common themes around, but all across the globe, like obviously just looking at the central banks. One thing I'm curious there is how, I know a lot of people that just like to stick to one currency pair, but it seems like you have the same strategy across multiple assets. Is that fair to say? And I suppose, how have you developed that strategy over the years?
Well, everything's interconnected. It's the correlation metrics that interconnect. So look at, if you're going to have a view, if you're going to have a bullish view on the dollar Canada, well, you got to be bullish oil, right? If you're going to have a bullish view on Aussie, well, you got to be bullish iron ore. I mean, all these things are interconnected, right? If you're having a bearish view on, dollar, you got to have a bearish view on rates. If you have a bullish view on dollar yen, you have to think U.S. yields are going up. So there's a lot of things here in this market that are all enveloped around one another.
I suppose, what advice would you have for those people that about, you're saying sometimes it's good to get away, sometimes it's to take a break? Is that something obviously you see as very important, to get out and exercise?
Yeah, I mean, I think family comes first, right? That's ultimately, you shouldn't be checking your phone when you're on vacation. Otherwise your positions that you've got on are too worrisome for you. But you got to just get out of the positions. If you need to constantly check your phones, you're probably trading too much. And that's a common problem we have right now because of the Snackwell influence. And what I mean by the Snackwell influence, it's the prevalence of free trading. Basically, commissions are pretty cheap, spreads are cheap. Therefore, it's like the Snackwell, those low fat cookies. People think they can eat 2 boxes of Snackwells and not get fat, but obviously we know the end result. Similar things happen in trading. People overtrade with predictable results. I mean, that's one of the biggest signals that we used in the quant analysis, was propensity for people to overtrade. Those were the people that were going to blow up their accounts. Number one signal. So that tells you that people who overtrade, there's a higher percentage or higher probability chance that they're going to blow up.
Well, look, I suppose something I do want to get a bit of your insight on, as well as, I think you've touched on a couple of times, the USD JPY. I'm curious to see what intrigued you about this currency pair the most, and then also more broadly the Asian trading session. What has drawn you to this trading session?
Well, when you're working for Sumitomo Bank, it's hard not to be the dollar yen trader. But obviously, I was getting a lot of calls from Toyota, Marubeni, Mitsubishi trading houses for dollar yen options and dollar yen trades and what have you. So that was just a natural to get in. But it was also getting back into that Plaza Accord trade where the dollar yen was the big linchpin trade of the decade, and that sort of resonated with me, and that's something that we always try to keep an eye on. Basically, there's lots of opportunities around dollar yen. I believe it's one of the better movers at times, especially when we get down to sensitive zones. I think retail traders did a great job over the last couple of weeks when I looked at the volumes that were getting done. The retail traders bought the dip to 104.50. They ended up cashing out here as the market moves closer to 106. So that was opposite of what the market was calling for. The market was looking for the dollar yen to go lower. So retail did well there. But there's opportunities there. I think primarily going forward, we're looking at higher inflationary inputs with the probably Democrat sweep the U.S. elections, and that's going to put more stimulus in the markets, which is going to result in more issuances, bond issuances.
What are the characteristics that you would say they need to understand about each session, or what tick boxes do you kind of think people need to know about these sessions before they trade them?
But it's the Asia session is just dead when it comes to G10 currencies. It doesn't have a great weighting. I think the biggest lead is into the London Open. If you've got ability to trade into the London Open, I think that's a pretty good read. That provides a pretty good lead. One, what real money is doing in the UK, what real money is doing in Europe, because ultimately it's real money that drives the markets, right? Not necessarily speculators. So it's what corporates are doing, what big investors are doing, whether they're moving out of US dollars, buying European assets. These are the kind of things you got to pick on. I find the pound has got a very definitive signal at the London Open, tends to run a little bit more. So if you're picking up the correct signals and it seems to make sense, I think those kind of trend views make a lot of sense in the overall scheme of things.
What it is over the years, or some experience that you have stuck out that have given you your edge in the markets, and how you utilize that?
Keenness to keep on reading, and that's probably what it is. I think to keep an edge in the markets, you just got to read, and read more. I think. And I'm not talking about reading people's views. I'm just talking about reading what's going on in the markets. Reading what the Fed watchers are doing is very, very critical. I think that keeps you ahead of the game. But remember, the idea in foreign exchange trading particularly is getting there 2 weeks before the moves happens. So, by the time the move happens, it's probably too late, given the predominance of algorithmic trading that just completely drives the market haywire if those signals start to envelope. So you got to get there early. And that's why it's sometimes wise when you're starting the move is to leg into the move as opposed to going all into the move. But when that move becomes closer to the payday, you can just sense it, then it's probably time to jump in.
Do you have any books that you specifically recommend to anyone, or any resources that you read?
Well, I tell you, I read the newspapers. I'm an old guy here. I don't even do it online. I don't find it as satisfying. So I've got subscriptions to the Financial Times, the Wall Street Journal, that I sit and I read almost page to page. I get up early every morning. I get up at 4:00 at the latest every morning. I do my reading, write my reports, go for a run, and come back and do some more reading. So I read the business sections first, obviously, but then after that, I read other sections, because you know what? Some of these other sections actually send signals, because if I didn't know that the luxury brands were sort of struggling at the beginning of the recovery period, I probably would have been owning some luxury brands instead of just going all into high tech. So this is what I mean. It's just reading all the sections. You can envelope many sections from your reading abilities in these top-notch newspapers that are cheap to have delivered.
And of course, your blog on the AxiTrader website is vital.
Yes, sometimes it's got a signal or two, but I still, as far as that's concerned, I still tell everybody, do your homework. I'm just hoping I can send you in the right direction, but it's your own homework that's gonna provide you with the cash.
Fantastic. Well, look, thank you very much for your time. I've obviously learned a lot, and a lot of practical tips there on what the markets are doing, things that you've learned over the years. So thank you very much.
Okay, thanks for having me, Jack. Talk soon.